Good afternoon, ladies and gentlemen, and welcome to the President Energy Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you when they're ready for you to review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, which should be in front of you now, and if you could give that your kind attention, we'd be very grateful. I'd now like to hand over to Peter Levine in Paraguay, Rob Shepherd in the UK, and Jordan Coleman in Argentina. Good afternoon.
Good afternoon. Thank you very much. And welcome everyone to Investor Meet, and welcome to President Energy's Unaudited Group Management Report 2020 and our outlook for 2021. So without further ado, I'm going to introduce my colleague Rob Shepherd, who will take you through the initial part of the presentation. You've got the investor presentation in front of you. So Rob will take you through the first 2 or 3 slides. Then I'm going to invite my colleague Jordan Coleman, who's Chief Operations Officer at LATAM in Argentina, to go through the pertinent performance slides, and then I'll come back in. So without further ado, Rob.
Thanks, Peter. I'm just looking at the results of the poll, and it looks like just over 80% of you on the call are shareholders, which is great. Thank you for joining. Around 19% are not. So I'll just give a quick overview of the company on slide 3. We're UK listed on AIM, predominantly production in Argentina, some in the US, and an interesting exploration block in Paraguay that those of you who are existing shareholders will know something of. So we're a proper operating company. As we say on the third bullet, excuse me, we operate all of our assets. There's method to that. We want to make sure that we run our activities as efficiently as we can. There's a real tight focus on costs and margin, and so we feel the best way to do that is to control our destiny, so to speak. And I'm pleased that on this call you'll hear a little from Jordan in country, who's responsible for making sure that we deliver projects we initiate and work through on time, on budget, and he'll give a couple of examples of what we've been doing in 2020 and what we're doing in 2021. Our focus as a business is predominantly on mature fields, excuse me, developing, optimizing, reducing costs across the board. As I said, there are a number of interesting case studies. As some of you will know, we've picked up interests over the last few years, both from Chevron in Argentina and also from the state. And in each time, it's been a similar modus operandi in terms of basically looking to optimize costs, optimize production, and make sure that we're getting best value from those existing interests for our shareholders. And then lastly, IFC was a long-standing shareholder of ours, World Bank, and so we're very proud and keen to ensure that we continue to operate at the highest level of appropriate standards, World Bank standards. The pie chart top left just sets out the shareholding. Again, those of you that may be new to the company may not be aware, but Peter holds through various interests or various structures, 29 just under 30%. Trafigura, that's something we'll pick up on as regards an important development during 2020. One of the world's leading oil and gas traders has picked up just over 16% interest in us. And there have been a number of positive developments and support that they've given us and will continue to give us going forwards. Schroders, just over 8%. Private office, Michinoku, just around 7%, and then around 37% is other, which those of you on the call, myself and others, will comprise part of. Fairly lean board. Peter, Executive Chairman. Again, some of you will know the history with Imperial Energy way back when in Russia. It's when I first came across Russia. I'm Finance Director. I was a banker at the time and supported Peter at Imperial as non-exec. I was then involved in a couple of smaller West and East African oil companies, and have now been with President for a number of years, for the last couple of years as an executive director. Jorge, very experienced ex-World Bank petroleum engineer, as one of our non-executive directors, Argentinian national. Alex Moody-Stewart, a non-executive director who joined the board a couple of years ago after a long-standing career in Schlumberger. And then Martin Oda-Pileta, who is Trafigura's representative on the board, who joined us last year when they crossed a 10% threshold in the interest they picked up on it in the company. So if we then move on to, I think I can still drive the slides, just to give a snapshot as to our performance in 2020. Obviously, it was a tough year for us. If we look at the positives, production was up 12% year on year, barrels of oil equivalent. But if we then look at that in context of a roughly 33% decline in realized oil prices, that's essentially what's driven a reduction in turnover. If you were to take a pro forma equivalent oil price to last year, that would have added some $18 million to turnover, just prices themselves. And so that shows largely where we've delivered a reduced revenue in 2020. But what we want to emphasize for shareholders, and what we think is really important, is notwithstanding the macro environment, what we've been able to do is control the things that are within our behest, or within our control. And we've just given a couple of examples here. CapEx, we trimmed CapEx during 2020 in response to the reduced revenue. But as importantly, we've actually reduced operating costs down some 20%, and that's not just increased production that is spread over a fixed operating base. We've actually been successful on a number of areas of further reducing operating costs, and we'll continue to do that. And hopefully Jordan will highlight one example of where we're continuing to drive margin. We can do very little about the top line, but we can do quite a lot about the costs in between, both from an operating cost standpoint, and the second point we highlight there is a reduction in debt. If we'd done that in November, debt would have been down some 20 million. But as those of you that follow the company will be aware, we took an additional facility in December of last year. Very attractive terms were being offered by the government in Argentina to stimulate investment. We saw an opportunity to bring forward a planned project to help optimize our costs. And again, Jordan will mention that and what that means in context on the ground. So in terms of what that's meant, again, these are unaudited numbers, so they don't go down all the way to the bottom line because of audit process and allocations, etc. So what we do, as we did, I think for the first time last year, rather than waiting until June to publish audited results, we give guidance or we give a summary of the numbers that we're confident in, and that demonstrated here through showing free cash generation of some $10 million and then an adjusted EBITDA of some $3 million. So the message from where we stand is that every company that you have listened to will have mentioned a tough 2020, but we've certainly not sat on our hands as a management team and have been very keen and focused on reducing the costs and elements that are within our control. And so we feel that sets us up quite well for 2021 in an environment of increasing commodity prices and returning to investment. And I think with that frog in my throat, I'll now hand over to Jordan.
Hi, everybody. Well, despite the pandemic and all the challenges of 2020, as Rob said, we certainly didn't sit on our hands. During the year, we did a lot of different projects throughout our fields. At the beginning of the year, we began with completing a pipeline to connect our Estancia Vieja field to the main regional hub to be delivering gas from both Estancia Vieja fields through Las Bases to this hub, which was very important for the development and allows us to continue on with the further development of gas in Estancia Vieja, which is the first time that gas is actually, in 2020, the first time gas was actually sold from Estancia Vieja to the market. So a very important development for President and for the development of our fields there. As part of this, we also installed and upgraded the Las Basas gas with 2 new compressors, so we could actually deliver that gas to market. And during the year, we're proud to say that, well, a number of our peers in Argentina were shut in due to a lack of product, oil, and gas. We managed to keep all of our wells running. We were never shut in. We're very thankful to Trafigura, who helped us with that. And that's one of the areas where our relationship with Trafigura really helped us this last year. So we managed to keep all of our wells flowing. We weren't shut in at all last year with regards to the pandemic. We kept our teams safe and healthy as well. So that's another significant achievement of 2020. We also completed did a workover campaign at the end of H2 of 2020. We reactivated some wells, kept some of our wells running to fight off the natural decline of the fields. And then the biggest successes for the year is we drilled 2 successful wells under budget and in the scheduled amount of time. We were the only company last year in Rio Negro that drilled wells, which is quite a success in my opinion. So we completed the Santa Vieja North X1 well, which is an oil well and exploration discovery, and then the Las Basas 1001 well, which is a gas well. Both have been put online just towards the end of last year, and we're expecting the production and the fruits of that labor to show through 2021 and beyond. And then another thing that we did last year for the first time is we were able to export oil. With the help of Trafigura, we were able to take advantage of outside of the country. So for the first time in the history of President, we were able to export oil from Argentina. So another success, I think, for the company. Now I just want to talk about 2021 and the outlook and what we have planned. In Rio Negro, we are just getting ready to kick off a drilling campaign. At the end of March, we'll be spudding our first of 4 wells in Rio Negro for gas. I'll be drilling in the Las Basas and the Santa Vieja fields. And we expect those wells to come online by the end of May to take advantage of the increased gas prices that we're expecting through the Argentine winter. So we've got all the team working diligently, preparing for that, starting location building, getting that going. So we were set to go for the end of March to spud our first well for the year. In Salta, we will also be drilling 3 wells, they're vertical oil wells in the Dos Benditas field, which is part of the Puerto Guardian concession. And all those wells will be online by the end of 2021. So we'll be drilling 7 wells this year in 2021, and that will be the most wells that President will have drilled in a single year in its history. We will also be focusing, it has been previously announced in an RNS, but began construction and the building of a oil treatment plant to put our oil into sales quality oil to deliver direct to the refineries. This is a huge undertaking in regards to reducing our OPEX. It will allow us to reduce our OPEX cost by $4 per barrel. And this is an example of where we've really focused on trying to increase our margins and increase our efficiencies and do more with what we have. And then for Paraguay, as Peter's mentioned, and as the team has been announced various times, is also continuing with farming discussions ongoing. We're targeting to begin drilling either the end of this year or beginning of 2022. Peter, let me turn it over to you. I know you have a couple of comments you'd like to make here.
Yeah, thank you very much. Just on this, on the box on the right-hand side. Sorry, let's go back to that slide. Sorry, we're more successful with oil than we are with looking at the numbers of presentations. There we are. Okay, so on the box on the right-hand side, you'll see the guidance that we're giving in terms of the market, which is a repetition of exactly what we've said in the RNS. Optimum field management, 3,600 to 4,000 with peaks either side. It's never just one figure in any particular day. Our mission here is to increase our well stock. It's quite obvious, because any particular well going down with a limited well stock does affect you from time to time. And whether it's a treatment that's needed, whether it's a workover that's needed, it does affect production, even electricity outages. So the bottom line is that it's very important to increase our well stock, and that's one of the reasons why we're drilling so many wells this year, so to smooth it out, and that's where the capex is going. Obviously, the capex also going to the treatment plant as well. It's funded by our own cash generation. That $5 million loan that we took at the end of the year, effectively, it's a bit like pass the parcel in Argentina. And anecdotally, basically, because of the inflation rate against the dollar, which is incessant, it's every day, if you care to look at the exchange rates, that means that it never is appropriate to hold many pesos. So it's a bit like pass the parcel. As soon as you get the pesos, you actually give it out, even paying people in advance for things, simply because you're fixing a peso rate there. And it's always the last person in the line who's ended up with the pesos, which then depreciate overnight that particular night. I know this is not something which is hard, is easy to understand in a different type of economy, but we play by Argentine rules, and that's very, very important. So the cash generation is complemented by current and additional non-equity funding, and with the emphasis on non-equity funding, because we have capacity for non-equity funding, and that's very important due to our cash flow, due to our success and assets that we have. And the full benefit of that capex really will only be felt from the beginning of next year, simply because the salter wells, which are in terms of production a significantly higher production oil than in Rio Negro, they will really only be coming on stream after testing towards the end or the beginning of this year and the beginning of next year. So the average production increase from our existing assets is 30% year on year. That's what we're looking at targeting. And obviously at the bottom, to renew the Puerto Flores and Estancia Deck concessions by the end of 2021 will allow us to bring some of that contingent resources, quite a lot of that contingent resources, into reserves, because the contingency of those resources is dependent on the length of the term. So to restate, the reserves that we've got, which are not insignificant anyway, those reserves are only calculated not in relation to what's oil under the surface, but it's actually oil under the surface that can be recovered within the existing legal term of the concession. And so extending that term means that we're able to bring more of those resources in, which means that our reserves will increase. And that's why this year we actually have identified those resources, because they're contingent upon the extension, and we're looking forward to extending that the core asset, Puerto Flores and Estancia Deck, this year. That unlocks the 9 million barrels of 2C. 2C is the way you classify resources. It's 2C resources, not necessarily reserves. Okay, Jordan, slide 7, over to you.
So as I mentioned, the activities for Rio Negro, we're focusing on 3 things this year. One is the drilling of new gas wells. As I said, we'll be drilling 4 new gas wells between the Estancia Vieja and Las Pasas fields. We are scheduled to spud our first well by the end of March, and we will have these wells on stream to take advantage of the winter gas prices that we're expecting and to see in the Argentine market. We'll also be we've already started, and we'll be completing our treatment plants by the end of June, which will assist us in increasing our margins and allowing us a cost savings of approximately $4 per barrel of oil in our treatment facilities, or in our oil treatment and OpEx, which will allow us to take advantage of the market and be able to have more flexibility as far as treating and delivering oil to the refineries. And then, as Peter mentioned, this year we're also focusing on extending our concession, increasing our reserves, which we'll be doing so this year and we'll be adding, with the extension of the licensing block, conversion of 9 million barrels of oil equivalent onto our reserves. In Salta, as I mentioned already, we are planning to drill 3 vertical oil wells, planned to begin in H2. In Dos Benditas, these are high impact development wells with significantly more production, initial production than the wells we have in Rio Negro. Along with this, we are planning a 3D seismic survey over the Canela Grande and Puesto Guardian parts of the Puesto Guardian concession. These are wells that have come online historically, over 1,000 barrels, but they have a very wells in Canela Grande and Puesto Guardian have only limited 2D seismic, and so we still don't have a complete picture of the structure, the reservoir, and what's available there. So our plans with a 3D seismic is to enhance that, to find some more wells to drill in Canela Grande, and these will be high impact wells in both Canela Grande and Puesto Guardian. And in doing so, obviously, be able to expand our reserve base with some new development wells and high impact production wells drilled in Salta. Just want to reiterate that, Puesto Guardian, we are the 100% owner and operator of the block. We have a long-term concession. It's through 2050 there. And so every single barrel that adds to our reserves and to our, it will be belonging 100% to President and will be produced out. So we've got an excellent track record. The field has very good producing wells that have very long tail and very long life compared to wells in other parts of Argentina.
Thank you, Jordan. So we get on to slide 9. That is actually hiding in plain sight for anyone who wants to, shall we say, think and delve further on that. We can't say any more than we have done at the moment. This is a serious step of her president. It doesn't deflect from the core business, but nevertheless, the fact that we've recruited already to our board someone with established credibility, you can Google her, in relation to the hydrogen aspect of it is very important. At a time when hydrogen companies seem to have got stellar valuations on OEMs, which are original equipment manufacturers, we are not going to go down that path. And the reason why we're not going to go down that path is because we see the OEM market increasingly competitive. And having been in, as chairman of Severfield, Rowan, as it then was, a manufacturing business, it's all about margin. And actually, the bottom line is it's all about capturing the end market. And we see that there's an increasing choice on the way one produces green hydrogen. And I want to stress, this will be green hydrogen, not any other color, blue, purple, pink, but green. And there are ways with catalytic converters, but there are more ways than one. In fact, there are probably 3 or 4 at this moment in time, and may well be more. So we feel that going into OEM is not only very capital intensive, but the bottom line is it's extremely competitive in due course. And therefore, we're looking at 2 aspects of that. We're looking at the sourcing, and we're looking at the production itself, and sales and marketing. And of course, it won't have escaped anyone but Trafigura is a major shareholder in us, and they're downstream. So it is a matter of utilizing one's best strengths, one's contacts, of course, that there has over the years. And we also, I would just highlight the fact that in terms of hydrogen, we have stressed it's non-Argentinian outside of Argentina. So there's not a lot we can say about this at the moment. We hope to say something in due course. if it transpires, just like the farm out, which is taking a bit of time, but it's coming there, of Paraguay, that is, step by step. And these things need to be properly incubated. But the good thing about President is it's got cash flow to incubate and to seed. It's got, through its management and shareholders, the appropriate contacts and serious contacts in various countries. And we actually view this as a very serious step. I can't really say any more than that, but it's worthy of a slide. It's worthy of a reference. Now, that therefore brings me to the summary, which is slide 10. So the main thing is to look at your core business and to make sure your margins and your cash flow from your core business are correct. There's no point buying overvalued assets or troublesome assets where you then have to, not only on top of the purchase price, got to make investments if you've got something which is really under your table, which you can bring out very quickly. And that's Salter as an example, and that's also gas. As Jordan has quite rightly said, gas was never produced from the Estancia Vieja field before by Chevron. It is being now. We've got the pipelines, we've got the infrastructure, so capitalize on that, and that's the first half of the year. In relation to Salter, well, we've had our experience in Salter. Those who've been a shareholder with us for a certain amount of time will remember that, and it's to the shareholders' cost, my cost, and your cost, that certain mistakes were made. We've learned from that, but we've got a really good team now. We've delivered wells on time, on budget. We've never had as strong a management group in terms of the various sections such as drilling, procurement, HSES, and engineering as we have now. And these are experienced people, and we feel very confident now in terms of well planning that we can bring wells on with the right costs on the right time and with the right people and targeting the right results. You can never know what the results are going to be definitively before you drill, even with development wells. But certainly Salter is underutilized. It's a large area. We've stressed it before, and one has to be judged by one's actions. So let's just see how it goes. But we are optimistic in relation to this, just like we are in terms of the gas and the developments. So we're targeting from our core areas average production increase of 30% year on year. You've noticed that we haven't talked about acquisitions in our core business. As and when that happens, it may happen. But at the moment, our capex is all centered upon exploiting what we've actually got and underutilized. As to Paraguay farming, yes, I know it takes time. But the bottom line is, it is a serious company with very serious pockets, with a very serious government behind them, and with a very serious intent. Main board has approved it, technical committees approved it. This is the best chance that we've got. Benefit of hindsight, we should have drilled this first some time ago, but hindsight is an exact science. But the major issue there, and I want to be more specific in Paraguay, the major issue is migration. And bear with me a moment, I'm going slightly technical here, but there are certain features which are required in order to drill a successful exploration well. First of all, the hydrocarbons need to have been cooked in the right way, the organic material. It needs then, we call it the kitchen. The kitchen then needs to migrate to what's called a reservoir rock, which is an appropriate rock. Conventional rock is limestone or sand, unconventionally shale, and by the way, that's the source rock. So it needs to be something like sand or something like limestone in order to hold the oil, and then it needs to be in a container. And that container doesn't need to be to leak from either the sides or from the top. And the top is called a cap rock. It's a lid on the container, basically. And if you've got all those features, the oil from the basin has migrated into reservoir rock, and the reservoir rock is held in by a structure, and that structure has got a lid on it. Then you're more likely than not to find oil or gas, as the case may be. In this instance, we're looking at oil. The major risk in Paraguay, and everyone knows this in terms of the farming and ourselves, is a migration from the basin. But we've got a very good chance. We've got analogues of migration, and we've got a perfect what's called a four-way dip structure, which is basically a container. We've got a cap rock, so we know that. So the risks there from this 3D seismic that we've got are pretty straightforward. But it is migration, and it's fair to say that any exploration is a risk, and that's where we lie. The rocks are, to answer any questions that there may be, we're looking at a mixture of sand and volcanoclastics. Read that from volcanoes, of course. And that's a mirror of what's across the border, which is producing palm lager. Enough of that. The alternative energy, diversifying for the future into the company is very important. And we see this as a very important step, but we'll say more on that, we hope, during the course of this year. But we are putting resource in. This is not something a spec thing which you're thrown in to try and get a cheap trick on the price. It's not. It is actually serious. It's a very serious step. It's a medium to long term step. It's not something overnight. So we'll come back to that in due course. So with that, I'd like to thank you for your attention and invite for any questions. Now, we have got 3 submitted questions, which I understand that the moderator will go through and repeat those questions. And then we've also got questions which have been submitted during the course of this discussion. So thank you very much for your attention. The significant number of investors who are on this call makes us quite humble, frankly, and your interest is very paramount. And that's why Gordon is where he is, and that is where I am.
Thank you very much. Thank you very much indeed, Peter. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to look at today's questions that have been submitted during the live event, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. We'll simply send you an email when they are ready for you to review. I'd also like to remind you that your feedback is important to the company. And immediately after this presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Peter, Rob, Jordan, we did receive a number of pre-submitted questions from investors, as you highlighted. And of course, if we can address those first, and then we'll look at the ones that have come in the live event. But the first question that we received is it possible to translate for the investor what the gas production translates to in terms of money rather than BOPD?
Yeah, well, we've been through this before. It's a mathematical calculation, but effectively we are being paid according to million British thermal units. Million BTU is the short form, MBTU. And so we are getting, at this moment in time, we're getting something like at spot we're getting 240 million BTU, and that million BTU is then put back, and you basically multiply that by 1,000 to get to cubic feet, and then you get the further calculation. But obviously, a BOE is worth less. A barrel of oil equivalent is worth less than a barrel of oil. And what we're going to do is, we've had this question before, and I think we've actually put it on our website, if I remember rightly. But what we're going to do is we will put it back on the website, and we will put it back on Twitter. And so that question should be answered later on today by Twitter, so you can just refer to it. And we'll set out in extenso the various calculations as to how much at current rate a BOE is, and what the projected rate is in the winter as well, applicable to us in terms of actual cash coming into a BOE. We'll do that by winter current spot rate, and we'll do that by projected winter rate in Argentina.
That's brilliant. Thank you very much. The second question we have, if I just condense it to the short, is can you elaborate, and I know you have in fact touched on this in the presentation, but can you elaborate on any progress made to the farm out in Paraguay? If this is not possible, to give us an indication of how you would rate the chance of success. And if I could probably put that back to you, Peter.
I think the chances of success are getting higher every day. We're getting closer. We're down to agreeing the legal form of agreements, which are in standard AIPN, American Institute of Petroleum Engineers form. These are standard precedents which anyone can see on websites, which one uses as a base for farm-out documents. It isn't rocket science. There are two principal documents. That's the joint operating agreement and the farm-out agreement. The farm-out agreement is agreement which actually is entered into by the farmee and the farmer, ourselves and party A, and that is the terms upon which they actually farm in to the asset. And then the joint operating agreement, which is a separate document, usually annexed to the farming agreement, which regulates the relations of the party inter se between each other during the conduct of the operation. And it's not a short process, but the main thing for us, the gating item, was to have the main board of the company. This is a state-owned company. A main board of the company approve it. And the main board is not just the commercial board, but the state representatives as well, and as well as the technical committee. The technical committee recommended to the executive committee recommended it to the main board, and so there was a number of hoops, and it took a long time. But in any event, during that time, and I will add this separately, we actually have been making plans. We've been out to Paraguay in terms of inspecting the rig. We're in negotiations with the party that currently owns the rig in Paraguay, which is the same rig that we drilled in 2014. We've made site inspections. We've got an independent inspection of the rig, which we're waiting to report on. So we're not losing time on that, and encouraged by the other party as well, of course. So step by step, forgive the delay, forgive the caution in terms of H2, but we hope it will be sooner rather than later within H2. But we don't want to prejudge anything. And also the usual caveat: until the fat lady sings and signs, then it's not a deal. And that's why we urge a certain amount of caution in relation to this. But using that hacking expression, we're very cautious, optimistic. Was that answering the question?
Perfect. Thank you very much, Peter. We've got just a few more questions that were pre-submitted. I noticed we're getting more coming in the live event, so I will run through these. The next question is: Trafigura have been on the board for a while now. Can you give us an example of where they have had an impact on precedent since they have been involved?
Yeah, being able to take our oil, sell our oil during the terrible times in 2020, and there were terrible times. To give you an example, and this is what people forget in relation to comparing H1 and H2. H1 started off of 2020 quite well with oil prices. It started off in the 60s. You can just look at the history of it. It went to the 50s, and then on March, I think it was March the 6th or 5th or around that time, it just fell off a cliff. And by the end of March, it had gone from mid-50s. It halved by the end of March. And so whilst the first 2 months started off quite well in relative terms, then it suddenly fell off a cliff. And Trafigura worked with us in a very sympathetic and a very understanding way. And so the relationship between us and Trafigura, just because we don't publish significant things in relation to this, doesn't mean that there aren't significant trading matters, and these are trading matters. So yes, the relationship between us and Trafigura is as strong as ever, perhaps stronger. There's many things that people don't see, that we don't publicize because they're trading issues and trading matters, but we are working with them on various matters, and if there's anything which is tangible, which is outside of the normal run-of-the-mill things, then that's fine. But they've helped us broaden our scope in Salta. Until Trafigura came on board, we were basically in a monopoly offtake situation with a company called Refinol, which is the refinery. Subsequent to that, Trafigura gave us another option to sell oil, which gave competitive tension, which elevated our prices, which means that when prices have gone up, now that they have, we get an even better price, and the differential has shrunk from Medinita, which is the Argentine price, from something nearly $10 a barrel differential between Salta and Rio Negro to now approximately $6. So are they making a difference? Yes, you bet they are. And is there a great relationship? Yes, there is. And if we go further in different directions, organically or non-organically, well, we do speak to them, and there's constant communication. So it's under the surface at the moment.
Thank you very much indeed, Peter. Next question. Oil prices at the time of writing are around $60 a barrel. How well placed are the company to benefit from this pricing level if it remains throughout 2021? To what extent has any capacity already been forward sold at a lower price?
I'll answer the last part first. None, because we believe that it's a dynamic situation, and we believe that the oil price range will be from Brent in this range. Now, whether that flows down to benefits of Argentina is a particular situation. It's the economy is not doing very well at all. The government quite understandably wants to keep a sort of lid on it, and the oil industry doesn't want the government to come in and regulate it. So it's almost like self-regulation. So effectively, we're looking. We'd be very happy, and our budgets are going forward for the rest of this year about $52 a barrel, between $51 and $52 a barrel, in terms of realized oil price for Rio Negro. As I said, you've got a $6 differential in relation to Salta. But Salta's costs are much lower, the infrastructure is lower, and our infrastructure can cope with increased oil production from the new wells without any material additional costs other than chemicals and such like. The bottom line is, yes, we are benefiting from more stability, but we don't want to effectively kill the goose that lays the golden egg. 52 is very nice at this moment. It's comfortable. We're not doing cartwheels on it. But the bottom line is, we live within our means, and that's one of the reasons why we're doing this treatment plan, to get more bangs for our buck in going forward. So our internal budgets, as I said, are about $52 a barrel going forward, and internal budgets next year, we're internally budgeting about $60 a barrel. Now, whether it gets there or not is a different matter. That's a view which you ask any two people, and you're going to get three people saying the same thing. Different. So hopefully that question.
Perfect. Thank you very much indeed. There's two final questions, if I may. The first one being, if the company wishes to see the shares re-rated, isn't the answer to declare a dividend? It says it's generating cash. Perhaps, Peter, I could hand that to you.
Well, actually, I'm going to pass that on to Rob. Rob, are you around?
Yeah, for sure. I mean, it's something that's been raised on previous occasions, and clearly is something that we would look at. But what's important is to make sure it's not a knee-jerk, a one-off. Right, so what we want to be looking at is evolving into a sustainable, cash-generating, dividend-paying business going forward. But in the near term, we think there are opportunities within the business to reinvest. Put simply, I was a banker a long time ago, and I remember Tullow borrowing money to pay their first dividend in whenever, and that was great. But it wasn't at the time sustainable, and that led to further challenges. So certainly it's something we'll look at. Peter's obviously, as I highlighted on an early slide, one of our key shareholders, so has always got an eye on ensuring or not letting the company sit on cash that isn't being put to work. So yeah, and simply put, it's certainly something we'll look at, but it's not something that we feel would necessarily be appropriate as a knee jerk. It needs to be at a point where we're confident that we're generating a sustainable amount of free cash to pay out going forward.
Thank you very much indeed, Rob. And finally, the final pre-submitted questions is, are you able to quantify the amount of oil you have in the undrained structure after drilling EVN-X1? Guidance was between 5 to 14 million barrels.
And the answer is we're not able to do that at the moment. It's still testing. We're still looking at it. We're going to have another fresh eye approach this year, within the next 3 months on that structure. Of course, there's oil there. We're producing it. It's good quality oil. But at the moment, we're not ready to tell the market what our views are. But clearly, we're producing oil. We've made a discovery there for the first time in that structure. It is a new structure. The question is just how much and how how optimally to produce it.
Perfect. Thank you very much indeed. Well, that certainly addresses all of the pre-submitted questions. So thank you for all those investors that submitted those ahead of today's event, and thank you to Peter and Rob for addressing them. Obviously, investors have now submitted questions throughout this presentation. Perhaps I could ask both Peter and Rob if you just select the Q&A tab on the right-hand side of the screen. Obviously, the questions are there for you, and if you scroll down, you'll pick them through, and I'll take the floor back once you get to the last one. So, if I may, Peter, if I may hand back to you, and obviously to Rob. Thank you.
Thank you. I'll moderate this, and I'll invite Rob and Jordan to comment as and when appropriate. The first question that has been asked here is: will all the 4 new gas wells drilled in Las Pasas be scheduled to be online by end May 2021? And there's nobody more appropriate to answer that than Jordan, who's actually responsible for getting them online. Jordan?
Yes, they will be online to take it at the end of May to take advantage of the gas prices, winter gas prices here in Argentina. Absolutely.
Thanks, Jordan. I've got to say about Jordan, investors may not have heard of anything about Jordan from Jordan before, but Jordan's been with us for a very long period of time, many years. He's joined us as a boy and grown into a man, as it were, and he's been a tremendous asset, very loyal, extremely hardworking, and extremely good at dealing with his own people and third parties as well. And obviously, is a fluent Spanish speaker, and he lives in Buenos Aires with him and his wife. So we're greatly indebted to Jordan. Not only is he a friend, but he's also a great man. Okay, so the next question is: with oil prices increasing, production increasing, what do you see holding the valuation of the business back? Oh dear. Well, you're talking about the market valuation. This is from Nick J. Well, Nick J, you're talking about the market valuation. We've made certain comments in relation to this. We've made certain comments on the presentation about looking for the record number of wells drilled. All we can do is try to get the message across about the scale of our work that we're doing and the new matters that we're doing. And as I said, Atomi is basically hidden in plain sight here for everyone who wants to think about it and just then do a bit of digging. In relation to the core business, well, what more can we say than what we're doing and how we're doing it? So the valuation of the business is subjective. It's a matter of, we've said this before, supply and demand. We don't necessarily want to get into that. But the bottom line is all our responsibility is to run the business well. The market's going to judge us by the company we keep. And at the end of the day, we've got to keep a good company, and we've got to continue growing. And there are various strands to our growth, which are in this presentation, which aren't hard to fathom. But that's all we can do, bring it to the market's attention, and then do the work. And we're all hands-on, whether it's Rob, whether it's Jordan currently in Buenos Aires, or whether it's me currently where I am now, which has already been said. We're doing everything that we can to demonstrate valuation and do this investor meet to actually bring it across. There's a Latin expression called res ipsa loquitur, which means the matter speaks for itself, and I can't really say anything more than that. Okay, Steve Y. Atomi, I understand there's very little you can reveal about this venture at this very early stage, but can you decide the budget to spend this area in 2021, please? Very interesting question. I'm sorry, Steve. The answer is no, we can't. Obviously, as I said, we're seeding it. Obviously, we're doing a lot of background work on it, and there's a number of people, including myself, who are doing not insignificant work on that. Whether it comes to fruition is a different matter. When we know more, we'll give more of an idea of the budget. But at the moment, these are plans, not programs. So thanks for the question. But we will keep the market informed. And we don't believe that I myself or any of the specific team on Atomi are wasting our time, and none of us think that, frankly. We think that we're going down a very interesting path. Michael C. How much oil is being produced and what is the split between salt and regrowing? Well, Michael, I'm sorry, but we've gone down this rabbit hole before and we're not going to do that. We're going to give average prices. We'll give our average production because it's always misinterpreted what we say, despite the fact we have caveats or comments. The bottom line is it's got to look in the round. We actually talked about December when the benefit of the wells started to come back. It's only February now, but the split between salt and Rio Negro is significant because Salter is not producing as much. We haven't drilled in Salter successful well for nearly 10 years, effectively. Rio Negro, actually, we haven't drilled in Rio Negro until October last year. We haven't drilled for 2 years, and again, highlighted in the RNS. That's a significant factor in seeing that we've been successful in arresting the inevitable declines and changes that there are in oil fields, where there is no real development. So sorry, I can't be more specific on that. But as and when we give a look back on average prices, then you'll see more. William W. How do you see oil prices going through the year? Well, William, we've already said. Brent is Brent, okay? So we can say what the consensus is, and you're in a same position that we are, to look at some of the analysts, whether it's Goldman Sachs, whether it's Vitol, whether it's Trafigura, whether it's Glencore, or whether it's BP or Shell, Chevron. Everybody has slightly different views, but I think the consensus is, as more and more capacity comes back into the market, and as there seems to be a certain amount of constraint within OPEC or OPEC Plus, that the oil prices will be trading with a band between 60 and 70. There are some industry observers, who would not be surprised to see 70 or 75 next year. But certainly, people are talking about $100 by the end of next year. They may be smoking something. And the problem is that if you do that, you're killing the goose that lays the golden egg, and everything's going to be proportionate. I've already mentioned about Argentina as well in that context. In terms of gas, and I'm talking here about Argentina, there will be a gas crunch. Anecdotally, it looks like Argentina will be importing LNG at $8 a million BTU. Now, the consequences of that for the local gas market, where actually Brazil is soaking up electricity from Argentina at this moment in time, which has helped support the gas price. There's a read across there, and that's why we are optimistic, let's just say, about a much more robust gas price, not just in winter of this year, winter southern hemisphere, but going into the summer of 2021/2022, southern hemisphere. Question from Stephen A. Are you able to transport third-party gas through the new pipeline and process third-party oil with a new treatment plant? Well, this is definitely one for Jordan. Are we able to transport third-party gas through the new pipeline and process third-party oil with a new treatment plant?
We are currently able to transport third-party gas. There's no third parties currently in our area that are moving gas to us, but we have that capacity to do so. There are a couple of our neighbors who are looking to develop projects that will end up passing through our facilities, but those are projects that are in the pipeline from other companies, so I can't speak too much on those. And then we will have the capabilities and capacity to treat third-party oil, absolutely, in our new treatment plant.
Thanks,
back to you,
thanks,
Peter.
Jordan. Michael C. You have quantified the odds of success for several previous drilling projects. What odds for commercial success would you give for drilling in Paraguay? That's precisely why we're not going to give any odds for commercial success in Paraguay. I think that the shareholders who've been there, done it, and got the T-shirt from 2014 would support me in this. We wouldn't be doing it if we didn't think that there is a reasonable. It is a prospect that certainly needs to be drilled. I've given you the features. I've given you the major risks. So you're using a traffic light system. You're ticking off certain things like structure, like Caprock, but you can't take migration off. And we are a bit away from the basin, but there's been a recent well in Argentina called Chireti in the north, which was the equivalent length from the source rock and found oil in not insubstantial quantities, producible, and is producing. It's all about migration paths. That's a risk. So I don't really want to put a percentage on it, but it's certainly absolutely a well worth drilling and worth spending money on, and that's why the farmer is looking at it. And of course, the oil prices themselves, the comeback for oil prices doesn't certainly harm the economics. Oil and gas, Perry, when you publish figures of oil and gas production numbers, can you share them separately? Yes, we will do in future, because of course, before we were hardly producing any gas. Going forward, yes, we will. Thank you for that. Stuart M, is the macroeconomic situation in Paraguay similar to that in Argentina? A big fat no, it's not. Argentina has its issues. Now, can you make money when a country has its issues? Absolutely. And the loan that we've taken, the no-brainer loan of 5 million, is just one example of what we're doing. Because I mean, the bottom line is, if we repay that capital now at the end of the year, at the end of the year, it will have significantly reduced, even allowing for the interest that we are paying in pesos. So, you know, there are certain benefits, and as I said, you play by Argentine rules, legitimate legal rules, and there is money to be made, a fair amount of money to be made in Argentina, but the general economic situation, macro, is extremely poor. There's no question. Paraguay has just issued a bond, just over 2% and change, a sovereign bond. It is very strong. It's benefiting from strong demand for soya, for meat. It's a very robust economy. So the macro situation in Paraguay and between Paraguay and Argentina is a sea change of difference. And Paraguay, and I can tell you because of where I am at this moment, is a robust economy. It's not developed yet, but actually in terms of how it's doing economically, it's actually doing better than Colombia at the moment. It's got a better credit rating than Colombia at this moment in time. And to issue the bond, as it did do recently at that level, in comparative terms to some Middle Eastern countries, is a credit to the president, and it's a credit to the government and the country as a whole. Zipco M, do you expect that current plan, and if Paraguay is successful, will be able to distribute dividend shareholders towards the end of 2022? Zipco, look, I'm a shareholder just like you are. I'd love to get dividends, but as Rob has kindly said, we are looking at developing things. Things may occur, but we've got matters in hand. So for the moment, at least 2021, no. But there's a lot of things, moving parts here in several areas. And you don't necessarily just pay dividends by cash in due course. So let's just see. Certainly what we need to do is wipe in terms of our what's called share premium account, to cancel the share premium account and have distributable reserves available. And we probably intend to do that at the next AGM. But that doesn't mean that we'll be declaring dividends at the next AGM. In fact, I can say we won't. But certainly, decks clean, whether it's cash dividend or whether it's in specie for shares or other things, let's just say, is a different matter. So with that, I will pass back to the moderator. Thank you very much. And
thank you very much indeed, Peter, and to Rob, and also to Jordan. I think you've actually taken all those questions that have been submitted both pre-event and during the event, and thank you to everybody that submitted questions. Perhaps, Peter, ahead of sending placing investors back to give you feedback, can I just ask for perhaps a few closing remarks? And then, as I say, I will redirect investors to provide you with some feedback.
Well, thank you. But the closing remarks are actually in the presentation, and rather than repeat it, I just refer to the quote right at the end, the last page, which is actually on your screen now, if you can see it, if you're on a computer, which is, we look forward to delivering in 2021. We've got a lot to do. We're not perfect. we do make mistakes, and everyone who's been a shareholder has seen and got the T-shirt from those mistakes, and none more so than myself in terms of this. So, but we're determined. We're returning to drilling. We're cautiously optimistic on a number of fronts. We've got a number of balls in the air, a number of moving parts, and what I think safely can say is that we're not a one-trick pony in terms of Argentina anymore. We're moving forward in different planes. So thank you very much, and we look forward to hearing from you. We're always welcome polite questions direct to us, and we always try to answer them as promptly as possible, as so much as we can without giving out price-sensitive information. We're open, we're transparent, we're a real company, and you'll have seen the span of our work. We want to give you more of that, more videos, to demonstrate that truly this is a very significant operating company, and in relative terms, in our peers, quite a successful one. Thank you very much.
Thank you very much indeed, Peter, Rob and Jordan. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, then the feedback page will appear instantly. But if you access the meeting via a link sent you by email, you'll just be simply asked to log back in to submit your feedback. But it would be very beneficial for the company that they understand your views and expectations. On behalf of the management team of President Energy, we'd like to thank you very much for attending today's presentation. That now concludes today's session. Good afternoon to you all, and thank you for your time today.